Hi, thanks for watching. I appreciate you being here. Welcome. A few weeks ago, I started making some budget videos because I love watching those on YouTube. I love watching other people's budgets. I love watching how they spend their money. I love it all. So I thought that it would be a fun way for me to share and document my journey. But recently, I started thinking about expanding my budget series. And one of the things that I've decided to start doing was reveal my zero-based budget with you. In this video, I am going to go over what a zero-based budget is. I'm going to provide some background information on my family's own zero-based budget, and then I am going to do a detailed breakdown of the previous month's budget. But before we get into it, here's a little bit about me. Hi, welcome to my channel, and I'm glad to have you here. Here's a little bit about my family. Our household consists of myself, my husband, and my toddler. My mom also lives with us, but she's not included in our finances. My husband and I both went to graduate school, but we no longer have student loan debt, fortunately. I work in banking and he works in aviation. I handle all of the family's finances, and I love my role as the self-appointed CFO. I love talking about all things money, making money, saving money, investing money, and optimizing my portfolio and my finances in general. I look forward to taking you on a wealth building journey with us. I hope you enjoyed the videos and the channel as a whole, and I look forward to getting to know you. I am very open, so feel free to send me messages at any time or starting conversations in the comment section below. Okay, so what is a zero-based budget? A zero-based budget is a method where all of the expenses must be justified for every new period. Companies use that a lot, but individuals can use it as well. When companies use it, they typically make a budget for the entire year. Most individuals make their budget 1 month at a time. Even though some people do try and estimate a year-long budget, I happen to be one of those people, but the most accurate budget you are going to have is going to be month to month, because you never really know what might crop up besides your regular expenses. Usually, a zero-based budget starts at zero and it ends at zero. The idea is that every dollar has a job. When you start your budget on January 1st, you don't have money left over from December 31st, because the idea is you put all of that December income to work. There is no such thing as idle cash in a zero-based budget. The money goes either towards bills, paying down debt, investments, or maybe even medium-term goals, the ones that are not long enough for you to risk putting the money in the market, but not short enough that you want to keep the money in cash. So what you would call a sinking fund. Whatever budgeting style you adopt, there are always some pros and cons. A benefit of a zero-based budget is that it requires you to justify a use for every dollar. That means you are less likely to have money sitting around that has no real purpose, and you are less likely to waste money. Of course, the downside is that it takes a little bit of time because it requires more work. If you have to force yourself to justify a use for every single dollar that comes in, there's a little bit more thinking that goes into it. But I don't think that the downside justifies not doing it. Here is the anatomy of our own zero-based budget. My family's zero-based budget is broken down into 3 main categories. The first one is bills. These are our obligations. We don't have a choice. We have to pay them. This is how we put food on the table. This is how we keep a roof over our heads. We also have sinking funds to meet medium-term needs. And then we also have investments. Investments, whether it is for college for our son, where we save in his 529, or money that we put into our brokerage account for long-term use. You will notice one thing in our zero-based budget is that we have a lot of credit card usage. The reason for that is because we put everything that we can possibly put on our credit cards, we do it. You're probably wondering, how does she eat? We don't see any grocery allowance. Well, that's because I pay for my food with a credit card, so I don't really spend cash on food. What ends up happening is I get a bill at the end of the month and I pay my credit card bill. The same thing for gas and household and personal care items, or any purchase really that allows the use of a credit card. For example, I had an issue with my sink a few months ago and I needed a plumber to come in. He came in, but he did accept credit card payments. Therefore, I paid with a credit card. That's not something that's going to come up as an individual breakdown in my zero-based budget. What we will see is the aggregate when I pay the credit card bill. I do have a separate budgeting mechanism that allows me to track my expense categories so I don't go over, but overall, you will not see it in this particular budget. The reason why we do that is because we want the points. We want the protection that using a credit card offers. You are much more protected and much more insulated when you use a credit card versus when you use your debit card or even when you use cash. And it also allows for better tracking. I am registered for one of these popular websites that allows you to track every transaction that you create, and by swiping my card, it gets uploaded to that website and I categorize it. Also makes the tracking much easier. Another thing that you will not see in my zero-based budget is things that are related to medical. The reason for that is it goes out, but it also comes right back in within a matter of days, since we use an FSA to file claims and get reimbursed for anything that we spend. The FSA money is still our money, but because it comes out of our paychecks before we ever get to see it, it's not cash that we ever have to really move around. A good example of that would be if I pick up my prescription at CVS. I have a $10 copayment on my prescription. I swipe my credit card for $10. I immediately get a receipt, and within a couple of days, I use that receipt to file a claim and get some FSA reimbursement. That FSA reimbursement goes into my account. I use that $10 towards my credit card bill. So although the money is moving, it's moving in and out in the same amount and it zeroes itself out. So for the sake of simplicity, anything that nets to zero, I completely exclude from this budget. All right, let's get to the previous month's $0 budget. If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good. And of course, subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. On the screen here, you can see a blank Excel sheet that shows all of the categories that make up a zero-based budget. Right now, I'm gonna do the money movement and the cash flow in and cash flow out for the month of April. But you can see the main categories are money in, money out, and any remaining money that is left over can be allocated to either savings or investments. When I do this one, I don't necessarily say paycheck 1 or paycheck 2. I just do the total for the month because I'm trying to keep it from being too boring and monotonous. I already do a separate, very high level overview of our budget and our finances. Those do get updated every month as well. I am going to link that video in the description box below if you are interested in checking it out. This month was an interesting month cash flow wise in a good way because we got some free money that we weren't necessarily expecting to get. So even though it is not necessarily a ton of money, it is still money that was pleasantly surprising rather than something that would upset me. All right, so let's get started. The first item on the screen is rental income. We have 3 rentals. I'm going to just include the total that we collected for the month, not necessarily what each individual rental brings in. The total for this month was $5,074. If you saw the previous video, you will notice that this amount is higher than the previous amount for the month of March. That is because there were some lease renewals and we did do some increases for the ones that did renew. My personal income for the month of April in total was $7,168. You will also notice that this amount is higher than the last time because the month of April was actually a 3 paycheck month for me. And on top of that, I got a small little bonus. For my husband, his total for the month was $7,431. And then in the other income category is where a lot of the interesting stuff happened. My total other cash flow in for the month of April, $473. You're not gonna believe this, but I got almost $500 in class action settlements. I didn't think it was possible to even get that much, but that's what happened. I am going to post them up on the screen. I chose my payment method as PayPal when I got the notification that I was eligible for a couple of different ones, and they all happened to, for some reason, pay out in April. So yeah, I don't even know what to say about that. That's what made it funny and interesting to me for this month. As far as interest income, we are trying to not keep a whole lot of cash in the bank. A combination of inflation eating away at your purchasing power and potentially missing out on returns over the long run by not having your money invested. Between not keeping a ton plus the fact that interest rates are just really rock bottom, at least on the deposit side, we only got about $12 in interest income. That leaves us with $20,158 in income and cash flow in for the month of April. On the expense side, the money outside, the number one one thing is the mortgage. I don't know why I always make it number one, in part because it is one of the highest expenses that we have, but also it is in some ways the other of priority because we would just be homeless. So I don't know, I put it on top every time I do my budget. That includes mortgage, taxes, and insurance that is escrowed. So $2,700 is what we pay every month. And we also have the expenses related to the rental property. Even though the rentals are covered by the rental income that we get, I do still consider it a line item in my budget simply because whether or not the tenants pay or whether or not we have a vacancy, we are still obligated to cover the cost. So I like to see it in front of me. It includes mortgage, taxes, and insurance. And the total for that is $2,550. The third category that I have here is rental expenses. So that is anything related to the rentals, but anything that is not considered a regular monthly payment like your mortgage or your taxes. In those cases, we're talking paying for maintenance, water, trash, landscaping, snow removal, electricity for the common areas, anything that you can think of. The amount for this month was $1,050. And then the fourth category is daycare. For daycare, we pay $1,360. And of course, my embarrassingly high car note was $940. If you want to know the story behind that, make sure you check out the video where I talk about that in detail. I will link it in the description box below. And after the car note, the next bill that we have is the American Express credit card. You will notice that our credit card expenses are very high, but you will also notice that there are a lot of things that I don't put on here. So for example, you will not see gas, you will not see food, you will not see the phone bill or the cable bill or Netflix or anything like that. That is because we put all of those things on the credit card and we pay them in full every month. If you're wondering how does she eat, when does she put gas in her car, is somebody else covering her phone bill? That's not the case. It's because we are paying it with the card. So rather than breaking down the card, I just tell you the full amount that I'm paying for the card every month. We do zero out the balances. I don't carry a balance. I don't pay the minimum payment. We make the full payment every single month. And for the American Express, that payment was $2,275. We also have the Chase Sapphire Reserve card, and the payment for that was $608 for that month. So for anything that you do not see here, but you know is somewhat a necessity, and you're wondering how is she covering this? This is how. Those credit cards is how we're doing it because we're getting those points and we're not paying any interest. For the Bank of America credit card, there was no payment in April. I also did not have any spending that needed to be paid for on the Target Red card either. That is $0 as well. The electric bill for the month of April was $206. I know this is really high, but that is life in winter in the Northeast. Our energy expenses are going to be very high. So I'm really looking forward to much better weather where we not only are not powering up the boiler, but we are also not using the lights as much because the days are longer or we're spending more time outside. I expect that this is going to be my highest electric bill until probably November or December. And then the next one is insurance, and that covers the two vehicles that we have as well as our personal property. As I already mentioned, the homeowner's insurance premiums are actually escrowed, so that is not included here. And the amount that we paid for insurance this month was $220. And finally, the last category is what I label as other expense. Other expense is something that I either was not expecting to have to spend money on, or something that is so small and comes up so infrequently that I don't think it warrants a specific line item. So either it is a small tax that we pay once a year on personal property, like an excise tax for our vehicles, or if we have to spend money to get our passports done or to get our driver's licenses renewed, that is something that comes up very infrequently. So it's not necessary that I budget for it every single month. In this case, the only other expense that I had was a bit of a surprise expense. Somebody that I know that I've known for a long time was having difficulty with something and they needed some money. I sent them $112. $112 is not that much money. They needed it way more than I did, and that's not what's going to make or break me, so I decided to lend a hand and be charitable. That gives us a total money out of $12,021, meaning that we now have $8,137 left. So what did I do with the rest of that money? Well, the first order of business on the list was my husband's Roth IRA. We put $1,000 every month into that account. As you know, the Roth IRA limit for 2022 is $6,000, so we will be done with that expense in June. For myself, $0 went into my Roth IRA. Why? Well, that's because I had the bright idea of funding it all on January 1st. Of course, I'm being sarcastic. It was not such a bright idea in hindsight because evidently the market is down pretty substantially since January. It's not that my account is being neglected. It's because my money is already in there and it has been invested. The 529 plan is the college fund for my son, and we put $500 into that in April. In our brokerage account, we have put $1,500 in April. I've had that brokerage account for a while, but last year was really the year where I decided to kind of get serious about saving outside of tax advantage accounts. This is why I am trying to be aggressive with it, but not too aggressive, to make sure that I do have some liquidity if I need it. I'm gonna skip the sinking fund for a bit, and I'm gonna go straight to the emergency funds that you see here. You will see that there is an American Express high yield savings account as an emergency fund, and I really didn't put any money into that, so that is going to be zero. And then for the I-bonds, it's another type of emergency fund that we have. I also did not put any money into that, and the reason for that is because really at this point our emergency fund is fully funded. It's fully funded for a minimum of 6 months, and if we decide that we are going to trim some areas, we can stretch it to 9 months. And if we decide to include unemployment insurance, we could potentially stretch it a year. There is a point where you have to say, I have to stop, and this is the point that we are at right now, that I have decided that we really do have enough no matter how you slice it. The other issue is with I-bonds, there is actually a calendar limit per social security number that is $10,000, and we actually maxed that out in January. We each put $10,000 in, so even if we did want to add more, we really couldn't. That's not really possible at this point. If you look to the right here on the screen, you will see that my goal is to have $0. I start the month with 0 and I end with 0. How do I do that? So I have to allocate all of my money, and I have to give all of my money a job. The only other category that is left is really the Bank of America savings account that we have, that we use as a sinking fund, and we are going to do $5,137 in there. And once I put that money in, you can see that is zeros. What is the sinking fund? I may make a very detailed video on what my sinking fund consists of, but right now I can tell you in the immediate future that I am anticipating big landscaping bill, because in the spring the first landscaping bill is usually pretty high. Additionally, there is a surprise expense, not really a surprise, it's just something that I forgot about and I forgot kind of how it worked, that I am expecting that is gonna be probably another $1,500 that I'm gonna spend. So right off the bat, I can tell you that for the month of May, I am looking at an additional $3,000 that I normally wouldn't have in my budget that I may be having to spend. So really that $5,000 sinking fund, approximately $3,000 of that is already spoken for. But really it's only another $2,000 that is allocated to future expenses that have a more distant time frame. But overall, this is really it for the sinking fund. We ended the month on target. We did not go over budget in any area. We were under budget slightly for some areas even, and we continue to be in the green, and we continue to be able to put money away every month. And if you're looking at these investment accounts, don't forget these are just the ones that we manage directly. We also have 401ks at work that we're maxing out. So we really are trying to do the best that we can to save aggressively and put ourselves in a position where and do everything that we can to accelerate this wealth building journey. I certainly appreciate you taking the time to watch the video. Please feel free to leave me some feedback or any questions that you might have on the topic. I hope you enjoyed it, and I will see you in the next one.